Passive investing and passive income became two of the most popular topics nowadays. I literally can't believe how many people are trying to get to this passiveness, but I don't think many people realize the level of passiveness, and different people imagine different things when they hear the word passive. So for some people, passive investing means that they are lying on the beach and they do absolutely nothing. Same goes for passive income, whilst other people are prepared to do just a little bit, and as long as their income doesn't depend on the hours that they've worked, they already call it passive. In this video, I'm going to tell you about my understanding of passive investing, because it's not necessarily you lying on the beach all your life and just getting the income from your investments. And I will also give you the best ideas, in my opinion, for investing passively. Because at the end of the day, we all want to do as little as possible for as big a profit as we can. So if you are interested in this topic and if you want to know the answers to these questions, then please keep watching this video. Hello guys, and welcome back to my channel. My name is Anastasia. On this channel we are talking about investing, and especially investing for beginners. I spend a lot of time reading and researching about investing, so I wouldn't call my investments passive, but I do hope that if you watch my videos and you learn something new about investing, then your level of passiveness will grow, because you will not have to spend as much time as I do trying to understand certain things, because of my very clear and very simple explanations. I really hope so. So before I tell you about the best ideas of how to make your investments passive, let me first explain to you what I think about passive investing on the first place. I personally don't believe in passive investing. I don't believe in passive investing, and I don't believe in passive income. For me, passive income and passive investing means I don't have to be there in front of my computer all the time. And when it comes to investing, the passiveness, the level of passiveness for me depends on how much time I have to spend analyzing the news, graphs, etc. of an asset that I invested in. I don't believe that it's a good idea to invest and forget. I can explain to you why. You see, I hear and read a lot about passive investing, and it seems to me that some people, maybe some people who work on Wall Street, want people to invest passively, and it's them who throw at us these ideas that you can invest and you can forget about this investment for 40 years and just come in 40 years by the time you retire and just receive the profits. I don't believe in that, because when the pandemic started and the shares of certain companies, for example those that are involved into tourism, fell massively, the majority of big investment companies, including the company of Warren Buffett that specializes in passive investing, the Warren Buffett strategy that tells us that we shouldn't trade every day, but we should invest into good companies, quality companies, and wait for them to grow, even they have withdrawn the majority of their funds from, for example, airline companies, because they thought that it will take a very long time for these companies to recover, and they might as well use this money somewhere else. Whilst those people, just the individual investors who believed in the idea of passive investing in the sense of just invest and forget, they never felt brave enough to withdraw the money that they had invested, so they lost on the opportunity of getting some profits out and then reinvest in this money once the markets have dropped completely. And at the same time, now they will have to wait for a very long time for certain industries to recover, and no one will ever give them the guarantee that these industries will recover to the pre-pandemic level. So it's sort of a balance between being passive and active at the same time. So you have to always keep an eye on what's going on in the world, and you have to have an idea what sort of assets you invested your money in order to be prepared to make this step, to make the move, and whether invest more money into a certain industry or withdraw the money from the companies, the industry of which is dying out. Now, if we are talking about the level of passiveness, of course it is different. Someone needs to look at their portfolio once in 3 months. Some have to look at their portfolio once in a year, in 5 years. If you have to look at your portfolio every single day or even every week, for me, it's not passive. Now, when we are more or less clear on what passive investing for me means, let me know in the comments if you agree with me or not, by the way. Let's talk about the ways of how you can invest your money in a more or less passive way. Okay, so far the best way of passive investing I found is Vanguard. Vanguard allows you to invest into index funds and it is already passive, but if you invest into life strategy funds, it's a total new level of passiveness, because with life strategy funds or the funds that allow you to invest until you retire, you literally can invest and forget until the time you decide to withdraw this money. You can set up a direct debit from your bank, and so you don't have to think about investing more money manually every single month. But the important thing that you have to remember is that you pay the fee, you pay the commission for investing into these funds, and you pay this commission because someone else on the other side of Vanguard works for you. So it's not like you invest into this fund and this fund stays exactly the same throughout the years. There is a person who all the time changes the companies that you have your investments in, and so the companies that you invested in now will probably not be a part of your fund in 40 years when you decide to withdraw your money. So it is passive for you, but it's not passive for Vanguard. Vanguard actually works a lot in order to rebalance and build these funds on the first place. But as we are in this video talking about the passiveness for investors, Vanguard and its life strategy funds for me is number one. Number two is ETFs and index funds. By investing into ETFs and index funds, you will not make huge profits because these funds are created to follow the markets. They are not created to outperform the market. And again, there are lots of people who are working behind the scenes and constantly adding new companies and taking the companies out of these funds so that they can maximize the profits. As an example, let's take Tesla, who was included into S&P 500 last year, but before that it wasn't a part of S&P 500. And if we look at this fund in 30 years, we will probably see completely new companies there. So if we wanted to invest into individual companies, for example, even if it's the biggest companies such as Apple or such as Tesla, we would have to keep a very close look at how the company performs, how it operates, and what their future plans is in order to adjust our steps to this company. With index funds, it's much easier. You just have to invest into this fund, but even with that, you still have to keep an eye on what's going on, because there are some events that affect the whole economy. For example, if the whole economy of America is affected, then it will obviously affect the whole fund of S&P 500. So again, it is passive, but it's not 100% passive. The next thing you may try doing is invest into very stable assets. For example, precious metals. If you invest into gold, if you invest into silver, there is a very high chance that over a longer period of time, the price of this asset is going to grow. You know, gold has been growing for years and years, and of course there were periods in the history where the price fell, but it wasn't much, and the general trend of where the price goes is as stable as it gets. Okay, the next idea for you is to start investing into RETs. These are the funds that allow you to get into the property market without investing into real property, because investing into real property is not passive at all. You all the time have to keep your eye on the market to find new and new properties. You have to then constantly think about the condition of your property. You have to look for the renters, you have to collect the rent, etc, etc, etc. There are a lot of tasks that come together with investing into real property. Whilst with REITs, you have to only choose a fund, because there are several different funds that invest into different types of properties, and this fund invests this money for you. So all the job is done by the actual fund. Then the fund collects the rent and pays it out to its investors as a dividend. So it is a great way to start investing into property with a huge level of passiveness comparing to investing into real property. The next idea is also quite passive, and it is connected to eToro. If you've been watching my videos for some time, then you know that eToro is my favorite investing platform, and I have a whole playlist of videos where I talk about my portfolio there and how eToro works. If you've never heard about eToro, then I invite you to watch those videos from that playlist, and if you want to register there, then please use the affiliated link in the description box below this video. But basically, eToro is a great investing platform for beginners, and my favorite feature there is called CopyTrading. CopyTrading is also in passive investing, and that's why I'm mentioning it in this video. So with CopyTrading, there is also passiveness only up to a certain level, because you still have to find the investors, the trades of who you will copy, but you copy their trades automatically. It is completely free for you, and that's why I think it's pretty passive. Also, if you watch the video where I review my profits and my results on eToro, you will see that the more passive I am with my investments on eToro, the bigger profits I make. What I mean is the money that I have invested into popular investors, so more professional people than me, where I just choose a person and then this person does all the job for me. I mean, decides when to invest and how to invest. All these investments have showed better results than the companies that I invested actively in myself. Of course, maybe this is due to my lack of experience and knowledge, but if you are like me, if you are a beginner or you just don't have time and wish to be constantly monitoring the market, then CopyTrading on eToro I think is great. The other feature on eToro, which is also good for passive investing, is called Copy Portfolio. This is when you copy the whole portfolio. It's kind of similar to investing into an index fund or into a life strategy fund on Vanguard, but it is riskier because as a rule it covers only a certain sector of economy, and of course your investments will in this case depend on this particular sector. If it falls, your investments will also fall. If you can think of any other ideas of passive investing, then please share your thoughts in the comment section below this video. And from my side, that's all for today. Thanks so much guys for your time and attention, and I hope to see you soon in my next videos. Bye bye.